Our latest report, it's covering 570,000 business customers of Westpac's, suggests that cash flow conditions are recovering, but it's grinding slowly forward. Encouragingly, we did actually see that the cash flow conditions index, so that's income to expenses, did uptick in Q1. It rose 0.4. And importantly, actually, if we take into consideration debt servicing costs, we did see a more marked improvement once we consider that we did have that interest rate cut by the RBA in February. Still, we do know that there are, across the SMEs and commercials, there are still some challenges, at least for SMEs. Within that, what we've noticed is that they are focusing more on rebuilding their cash flow buffers. We did see an improvement though. We did see that the share of SMEs that have seen an improvement in cash flow conditions did uptick a little bit, still below its peak from what we've seen previously, but it is slowly improving. This is the second consecutive quarter that improved. For commercials, they've been a lot more resilient. They've been not only improving their cash flow buffers as well, but they haven't been afraid to invest. In fact, actually, we've seen a threefold increase in investment in plant and equipment, the lending to these areas, than they are in working capital. So they are still looking at building capacity. If we drill down a little bit more into the industries, again, we're seeing actually some signs that we're getting a bit more broad-based improvement in terms of that cash flow conditions. So 10 out of 13 industries actually did see an improvement in Q1. And in particular, it wasn't just the non-market sectors. So it wasn't just the health, education that we were seeing improvements. We also saw it in some of the other services industries, such as recreation. Now, it wasn't all good news. We do know that the retail sector is still facing some softness, which isn't really surprising given that we've had other indicators which shows that consumers still remain fairly cautious. We also did see that actually on the agriculture sector, things were a little bit tough as well, which of course during this period we've had the floods in Queensland due to Cyclone Alfred, and we also then of course on the other side also saw drought in other parts of the country, and that did weigh on the cash flow conditions for the agriculture sector. Looking ahead, we still believe that the recovery in cash flow conditions is going to continue to improve. Now, without a doubt, there's still challenges. We know that since the Q1 report, that we've had an external environment that's become a lot more challenging. And with US trade tariffs, that is going to have some impact on the Australian economy. Still, we think that the overall impact is going to be very small for Australia. And importantly, if we look at the industries, we do think that it's going to show resilience. It may not be uniform, but we will see resilience, and there could even be some opportunities for several of the economies. So forward ahead, we do continue to see this recovery in business conditions across the industries. It will be slow, but it will continue going forward. And we know there are tailwinds. Wage growth is moderating. We're looking for further interest rate cuts as well. So this should all be improving that sort of gradual recovery that we're already starting to see signs of in the cash flow conditions.
The content of this recording is informational and of general nature only and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.